You recently have been covering the accelerating process of de-dollarization and China's leading role in it. I want to just pull up a couple of stories for you to comment on. I know that you had analyzed this one, how China is quietly diversifying from U.S. treasuries. This has been a big panic since Trump's tariffs began. Now, I also wanted to bring this up regarding de-dollarization because it is a direct reference to it, and that has to do with Africa, which doesn't maybe get enough attention when it comes to this process and the China-Africa relations. It says why African traders are looking beyond the US dollar to China's yuan. Buyers in Africa favor doing business in the Chinese currency as geopolitical tensions heat up. Ben, talk about this process that's accelerating as the United States' economic war ramps up, not only on China, but really the entire world, and in particular, of the multipolar world.
China's been de-dollarizing for well over a decade. Of course, it didn't start with Donald Trump, but Trump's tariffs and trade war have really accelerated this process even further. So this really goes back to the 2008-2009 financial crisis, which of course started in the US and the US financial system. It was a wake-up call for many countries, including for China. The governor of the People's Bank of China, which is the Chinese central bank, issued a famous paper in which he called for a new financial order, and he called for alternatives to the US dollar. He proposed that we go back to look at the proposal made by John Maynard Keynes, the renowned economist at the Bretton Woods Conference in 1944, for a neutral global reserve asset. So that was in 2009 in response to the US financial crisis. And then starting in 2014, especially as the US engaged in quantitative easing, and a lot of countries feared that they would lose real value on their investments in US government debt over time. China, since 2014, has been steadily reducing its holdings of US Treasury securities. What's a Treasury security? It's US government debt. It's the bills, notes, and bonds sold by the US government. Now, since 2014, China has been reducing those holdings, but they're still really, really big, because China has an enormous trade surplus with the rest of the world, a big current account surplus, because China is the world's manufacturing superpower. China produces about 35% of global manufacturing output, which is nearly 3 times the output of the US. China produces everything, and even a lot of what's produced in the US relies on inputs, on intermediate goods coming from China. And we're going to learn that very soon, because there's going to be huge shortages in the US due to Trump's tariffs of 145% on China, because it's not just the goods that the US gets from China, but also the inputs needed to make goods domestically in the US. Okay, so China's been de-dollarizing. It still has enormous holdings because its reserves are over $3 trillion. Of those $3 trillion of reserves, over $700 billion are US Treasury securities. Even though the number has been falling over time, China doesn't want to just immediately sell all of them, because if it did that, one, it would be seen as a kind of act of economic war against the US, dumping all of this debt, and it could cause a bond crisis in the US, bond market crisis. Now, this is a card that China has, and the Wall Street Journal has been afraid of this. They're warning that Trump thinks China has no cards. It has this really big card, which is it could dump all of this US government debt and cause a huge crisis in the US bond market. But of course, that would be seen as an escalation. China doesn't want to do that. China also doesn't want to do that because they would lose value on those bonds, because if you're just selling things at a fire sale into the market at a loss, you're going to be losing money. So if you do it steadily over time, you don't disrupt the market, at least you'll keep your value over time, and you won't lose a lot of the value that China got from producing things. You know, the US, Trump complains about the US massive trade deficit, the current account deficit it has. But I mean, the US prints money and then gives other countries money and then imports real tangible goods produced by other countries. So Trump says the US is getting ripped off, but ironically, the US designed this system in a way to just be a vacuum cleaner, to suck in all of these goods produced by workers around the world and to basically pay them with IOUs that the US government's never going to pay. Okay, so that's China's situation. What does China fear? Well, the reason that China's accelerated this slow, gradual de-dollarization is because of 2 main fears. One, China fears that the US will simply seize, that is, steal, the nearly $800 billion of treasury securities that it holds in its reserves. And China's also afraid that the US will do a de facto default on its national debt. I'll start with number one. There's a precedent for this, which is in 2022, the US and the European Union seized $300 billion worth of dollar and euro denominated assets held by Russia, by the Russian central bank. This was money belonging to the people of Russia. It was not Putin's bank account. It was the Russian central bank's reserves used to stabilize the Russian ruble, the currency used by all Russians. Well, Joe Biden famously said that the US wanted to collapse the Russian currency. He wanted to turn the ruble into rubble. They failed to do that, but they were trying to do so, which would have caused extreme economic suffering for all Russians. It was collective punishment of the entire Russian population because all Russians use the ruble. It's not just Vladimir Putin. So the US and the EU seized $300 billion worth of those assets. And this came after the US and the Western powers also seized many billions of dollars of assets belonging to Iran, Syria, North Korea, Afghanistan, and of course, Venezuela. Let's not forget that in Trump's first term, he launched a coup attempt against Venezuela, and the US and European countries stole billions of dollars from the reserves of Venezuela, including gold. There's still gold, billions of dollars of gold that belongs to the people of Venezuela that is sitting in the Bank of England that was stolen from the people of Venezuela. They refused to give it back. Their original excuse was that they didn't recognize the elected president, Nicolas Maduro. Now, and they previously recognized this US appointed coup puppet, Juan Guaido, whom Trump nominated to be fake president, despite the fact that he never participated in a presidential election. Well, he no longer even pretends to be president. He claimed his so-called term, his imaginary term, ended, and yet the Western powers refused to give that money back to Venezuela. So they're pirates. So that was a wake-up call to many countries saying, wow, we cannot hold U.S. assets because they can just steal it. If they decide, if our government does something they don't like, they can just steal it from us, which is what they've done in all these countries. But previously, there were concerns, but they thought, okay, well, they're only going to do it to small countries with revolutionary governments like Venezuela or Iran. But then they did it to Russia in 2022, which is, a massive country, a great power. And this scared a lot of countries, including longtime U.S. allies like Saudi Arabia and Egypt and Turkey. And they started really heavily diversifying their reserves and buying a lot of gold, a whole lot of gold, and trying to sell off U.S. assets. So this is a process that's not new. But then there's one other element I mentioned, which is China is afraid of a de facto U.S. default. What do I mean by that? Well, Trump has this idea that he's going to force other countries to agree to a so-called Mar-a-Lago Accord, which is based on the Plaza Accord that the Reagan administration imposed on U.S. vassals, allies and vassals in 1985. This was when the U.S. dollar was very overvalued because the Fed under Paul Volcker significantly raised interest rates due to the big inflation in the 1970s. So the dollar was overvalued. That hurt U.S. manufacturing. And the Reagan administration, like Trump, said it wanted to help U.S. manufacturing by bringing down the overvalued dollar. So in the Plaza Accord in 1985, the U.S. forced West Germany, the U.K., France, and Japan to help the U.S. to devalue the dollar against their currencies. This led to a big asset price bubble in Japan because the Japanese yen was significantly overvalued. It caused many economic problems in Japan. When the asset price bubble popped in the early 90s, it caused economic crisis, which is known as the lost decade of stagnation in Japan. So Trump wants to do that again because he thinks the dollar is very overvalued. He wants to do it again, ostensibly to help U.S. manufacturing to the extent it even exists. Because if the price of the dollar goes down against other currencies, it makes U.S. exports more competitive because they're cheaper for other people. So Trump wants to impose a similar deal that's informally known as the Mar-a-Lago Accord to force other countries, especially China, to allow the U.S. to devalue the dollar against their currencies like the yuan. Now, China is never going to do this in a million years. The Chinese economists and officials have closely studied the effect of the Plaza Accord on Japan. They would never fall for that again. Also, Japan has been militarily occupied by the US for 80 years. It's not entirely sovereign. The US has significant control over Japan's foreign policy. So Japan couldn't really say no. Whereas China is much more independent, much more sovereign. So Trump thinks he can do that. It's not going to happen. He also thinks he can do it again to Japan, South Korea, European countries. Even that is not looking very probable. It is plausible, but it's not looking very probable because even Japan is pushing back. So what Chinese officials are saying is that if the U.S. does this, one, it would essentially amount to a default because the U.S. is going to force other countries to exchange their existing U.S. Treasury securities for 100-year U.S. government bonds with no coupon, with no yield on them, which means that every year they lose value because there's inflation. So they're helping to fund the U.S. government by lending the U.S. government money and getting nothing in return. So in 100 years, yeah, they'll get paid back the principal, but it's going to be very little with inflation. They're going to lose the vast majority of what they invested. So one, China's concerned that the U.S. is going to default. Two, China's concerned that the U.S. could seize its assets that it has in dollars. And three, China and many other countries can see that the U.S. is not a reliable country and its financial system is increasingly in crisis. And it's likely there's going to be significant inflation in the near future in the US. So other currencies have been actually rising against the US dollar, like the Japanese yen, like the euro, like the Swiss franc. So even if you did invest in US assets and you weren't afraid of the US defaulting or afraid of the US seizing your assets, you're losing value in those US assets as the dollar falls against your currency. So increasingly, this is why even the mainstream Western financial press is saying that Trump said he was going to save the dominance of the US dollar. He's actually accelerating the decline of the dominance of the US dollar and forcing other firms around the world, not just governments, but companies, financial firms, to seek alternatives out of their own economic interests. It's not just geopolitical at this point, it's also economic.
Well, I think the other thing to notice is that China, I believe, is doing a kind of a Tai Chi move. When I say Tai Chi move, it's this notion that if you put pressure on somebody as they're moving, all of their attention goes to that part. And that gives you the capacity to do something even more fundamentally disruptive, which I think is what is happening. So this discussion around, treasuries and T-bills, all of that, I think, is in play. And I think the larger, deeper currents that are happening, which are invisible, but I think are very, very clear, is that China is building out a different financial system. I think we can go more into detail if necessary. But I think the key thing to remember is that the Chinese invented coinage. When the Romans were using salt, this is where we get the word salary, the Chinese were using minted coins. And then when the West finally caught up to minted coins, the Chinese in the Song and Tang dynasty were using paper notes. And paper notes function only if you have a highly structured and reliable central administrative system. And now China has already moved into digital wallets. Essentially, it's a digital society. Nobody uses cash in China anymore. And they're building out CBDCs. And with the rest of the world, they're building out various ledger and clearinghouse systems that are blockchain, securitized, etc. So there's an entire vast architecture of alternative financial payment systems that are currently being built out. And I think the US doesn't really understand what's going on. I think they have some very, very basic, simple ideas of what currency and what money is. But as we know, money can be a medium, a measure, a standard, or a store. China is working on the standard, that is to say, something that can be used as legal tender in the digital domain as a way of keeping track of credits. And then it's also building out various kind of stores, commodity-related stores that assure the value. And this is very easy to do because China's key relationships are with the BRICS, which are all resource and energy powerhouses, whereas the US has fundamentally financialized its entire economic system. And so the only way that it has of asserting value is to have a highly functioning system that is rule-bound and regular and reliable, which is no longer happening. And the other is to exert force, but it can no longer do that. And so I think this kind of financialized approach and its kind of attempt to extract rentier profits on pain of coercive power is no longer going to be capable. I think that very soon many countries are going to call the bluff on that.
Ben, you mentioned all the ways in which the world is doing it. And, in this South China Morning Post article, I want your comment on this. They talk about how in Kenya there are traders, the local traders, who are establishing localized system for settling payments for Chinese imports in their own respective currencies. And you've also talked a lot about currency swaps and things of this nature. So what is the exact architecture then of this? Because a lot of people will dismiss de-dollarization, say, well, it's the US dollar is going to be the foreign reserve currency for a long time. But yet you see the poorest countries in the world, the most underdeveloped, those within BRICS who are coming together as formerly part of the third world, they're coming together to accelerate this process and do it in their own respective ways that might go up beyond or fill in more detail than just this notion that, well, the currency is going to be replaced, the dollar is going to be replaced altogether. Your assessment and analysis.
I often say that when we talk about de-dollarization, we have to distinguish between two different kinds: de-dollarization of trade and de-dollarization of savings. Now, de-dollarization of trade is what we're talking about here, and frankly, it's kind of easy to do. You just trade with your local currencies, and there have been many new institutions set up that allow this to happen, including, China has developed its alternative to the SWIFT interbank messaging system that's dominated by the US. Russia has also developed an alternative to SWIFT, and China increasingly is using its own currency, the yuan or renminbi. Yuan, for people who are confused, the renminbi is the official name. Yuan is the unit. So it's like a dollar, right? Or like a buck. You say like $5. So yuan is what's often said. And so China now does slightly over half of its bilateral trade with other countries in yuan, in its local currency. But China still holds a lot of dollars in its reserve. So those are two different things, right? If you look at BRICS, a lot of countries in BRICS are now trading in their local currencies. Brazil and China signed an agreement to trade in their local currencies. China and Russia now trade, they do more than 90% of their bilateral trade in either yuan or rubles. And, Russia and India are doing trade in their local currencies, Russia and Iran. That's not that difficult to do. What is more difficult is to de-dollarize savings, because what are foreign exchange reserves? It's essentially the savings held by a central bank in order to stabilize the currency in case the central bank needs to intervene in the foreign exchange market to either appreciate or depreciate their currency in case there's some kind of crisis and they have a big current account deficit or surplus or whatever. So de-dollarizing savings is a little more difficult, but that's also happening because, until recently, what we constantly heard from especially Western financial analysts is that there's no alternative to the dollar as a savings asset, that it's the cleanest shirt in the laundry basket, that, there are other currencies that also are possible. You could buy assets in those other currencies, but they don't have large and liquid enough bond markets. So for instance, China has been buying a lot of other countries' sovereign debt. So European bonds, even Japanese bonds to a lesser extent. And the argument made is that, well, Canada has a bond market, Germany has a bond market, the UK has a bond market, but these bond markets are not nearly big enough and they're not nearly liquid enough to replace the US bond market. What does liquid mean? In finances, how easily you can move in and out of the asset, exchange it if you want to get back into cash. And yeah, the US bond market is enormous because US government debt is so big. It's very easy to buy and sell bonds on a daily basis. It's a little slower for some of these smaller bond markets, but you have to so you trade the risk in terms of liquidity with the risk in terms of safety, because maybe the US bond market is more liquid and larger, but it's not as secure because the US can just steal it from you if you buy it. And two, increasingly, as we see in the US, it's likely that bondholders are going to lose value over time with stubborn and persistent inflation in the US. And Trump he keeps saying he wants to bring down interest rates, and he wants to, remove Jerome Powell, the chair of the Fed, because Powell is not reducing interest rates fast enough. So Trump really wants bondholders to take a big haircut, in the sense that they'll be holding on to these bonds that over time are going to lose value, because Trump wants much lower interest rates despite higher inflation. So if you have inflation of 5% and you're getting paid 4% on your bond, you're actually losing value over time. So despite all of the supposed advantages of the US bond market being so big and deep and liquid, in reality, countries have been looking for alternatives. And one of them is simply gold. I mean, this is why the price of gold has been skyrocketing. It's now well over $3,000. And you look at a chart of gold just in the past 2 or 3 years, and it's basically, it's just completely up with almost no exceptions. And it's going to continue going up, because what we're seeing essentially is the devaluing of the US dollar against gold. And Trump, as much as he said he was going to save the dominance of the US dollar, he's sending many messages to people around the world that even holding dollar assets in your savings, in your reserves, is no longer reliable. So previously, when we talked about de-dollarization in the past few years, it was mostly de-dollarization of trade, like you were talking about in Kenya. In every single country in Africa, their largest trading partner is China. And obviously it makes sense. They import many things from China, including cars, electric vehicles, solar panels, machines, so many things. China produces everything. What would they import from the US? They would import soybeans. They would import oil. The US doesn't produce that much anymore. It's a financialized economy. So it makes sense that these countries are looking for ways to, one, to reduce the cost of doing business, because every time they have to exchange for dollars and then maybe exchange for yuan or just pay in dollars, regardless, they have to pay some fees every time they do that when you settle those in dollars. So they'll cut out the middleman, reduce trade costs by settling in their local currencies. It's better for them anyway. And then they also don't need to deal with the US banking system, because the US controls the international financial system, at least the one that it created, although China is creating an alternative kind of parallel financial system. And the way that many international transactions worked until recently, it's changing, but most of the time when trade was settled between different banks, because, an importer in Kenya will have their own bank in Kenya, and then an exporter in China will have their own bank. And how do those banks communicate? They almost always, until recently, did so through what was known as a correspondent bank. And until recently, almost always that was a US bank, largely in New York, like JP Morgan, Bank of America. So what happened is that the US claimed that all of these transactions touched US soil, in scare quotes, because they went through a US correspondent bank, even though it's all digital. And that means that the US said that every transaction involving dollars had to abide by US law, including anti-money laundering law, including know your customer law. And of course, when the US has sanctions on a country, it says, oh, well, if you're doing trade with Iran or North Korea or something, then you're violating our sanctions. Therefore, we're going to take action against you, even though we're not involved in the transaction, even though it's a transaction between like China and North Korea or Huawei and Iran. The US says, well, it goes through a correspondent bank. Therefore, you're violating our law. Therefore, we're going to take action against you, which was one of the excuses used to imprison, effectively do house imprisonment of the CFO of Huawei. That was done by Canada, but the US was trying to extradite her on these bogus charges of doing trade with Iran. China doesn't have sanctions on Iran. China can trade with Iran all at once, but not when the US has this system in which it's always the middleman. So cut out the US middleman and you solve all those problems. So again, the more that the US bullies countries and pushes them around, the more it actually accelerates the decline of this very system that it created to benefit itself.
Yeah, KJ, definitely come in here. I just want to say I also remember during the 2019-2020, the Hong Kong riots that the U.S. supported. They threw in there into their legislation around Hong Kong sanctions on Hong Kong if Hong Kong violated sanctions on Iran and the DPRK. It just goes to show how extensively reliant the U.S. is on this form of warfare. But KJ, please.
Yeah, so they're using lawfare and financial warfare to control the entire global system. I think the point that Ben makes is it's a very, very important point. Remember when Meng Wanzhou was indicted, she was indicted in the New York Southern District Court. Now, what in the F does New York Southern District Court have? Why does it have any jurisdiction over a transaction done in China with a Hong Kong bank, with business in Iran? Why do they have any jurisdiction there? And of course, as Ben points out, it's because the dollar clearing goes through New York, and because it transitions through New York for a tiny number of microseconds, the U.S. claims long-arm jurisdiction. But all of this is a violation of the spirit of the financial system itself. The financial system only works if people trust each other. Everything is based on credit, and credit simply means I believe you, I trust you. And when you break that trust, you have already broken the foundations of the financial system. So by hyper sanctioning, hyper weaponizing its control of the financial system, the US is actually driving other countries far, far away from the system. And therefore, this is going to result in a continuous process of de-dollarization. De-dollarization has been happening steadily over the past 2 decades. Currently, we've diversified into a basket of at least 40 different currencies. But as I said, as the architecture is built out, and as we have, digital clearing houses and digital ledgers that are set up, essentially this entire system of financialized trade, that is to say, this is where money is used as a medium of exchange and a standard of deferred payment. All of that can be subsumed under these new electronic architectures that China is building out. Those will be powerful and transformational. The other value is dimension is the value of money as a store of value. And that is a more difficult process. But as Ben points out, it's moving into commodities, in particular, bullion and metals. But ultimately, I think it all boils down once again to the fact that the entire financial architecture is built on the understanding that there are going to be some foundational rules that allow trade and transactions to happen with reliability, that are not arbitrary, capricious, and driven purely by power. And the US has been abusing this power over and over again. It doesn't realize that the more that it does this, the more it undermines its own capacity to control the financial system. So as it grasps harder, its power, seeps out faster from between its fingers. And I think that also, certainly in the case of Hong Kong is a major financial center. And by weaponizing the financial system against Hong Kong, simply, once again, it sent the message that the US is not a reliable partner and not a reliable guardian or steward of a global system, of a global financial system. And therefore, it is actually signed the death warrant of the dollar and the US financial system itself. It just doesn't realize that that's what has been happening.